delay in the setting up of a government will probably, affect the Thai economy negatively. Well, first of all, of course, with the budget for the next fiscal year, which actually starts on the 1st of October here in Thailand, will probably be delayed if the government is delayed. So that, again, has an impact on government spending, at least for the last quarter of this year. And of course, if there is, unrest or protests on the streets that come out, then that will probably derail tourism, especially international tourism in Thailand this year, which is I must say, the hope for our Thai economic recovery here. If that gets derailed, then growth this year will probably not be according to the targets that many have set. And of course, are actually waiting to see who the new government will be before they start operating or investing more here in Thailand. So, that again would delay the private investments in Thailand. So I think there are these three, main impacts due to the uncertainties from the upcoming government.
And Kirida, leading up to the election, we saw both sides, or almost all the parties, actually promising a lot of relief for Thais who were really hit by the COVID-19 pandemic and consumer confidence through cash handouts and other forms of support. I think the concern that some might have actually is what kind of strain this might put on the fiscal coffers or the fiscal balance of Thailand. I mean, these are significant promises actually that were doled out. Do you think that these will actually come to fruition? And does Thailand have the room or the nuance, at least, to try and handle these potentially significant cash handouts or supports given to the people?
Yes, you're right. The promised, spending from the different parties, especially the Pheu Thai and the Move Forward Party, is quite huge. And the only way that they'll be able to finance it in the short term is probably through loans. So public debt in Thailand will definitely rise. It's now 60% of GDP or 61% of GDP. It could go up, to almost 70%. But again, there is still room because, as I mentioned, public debt to GDP will be around, 60 to 70%. But again, the concerning factors at the moment that I have is that with so much spending in a very short time, that might put pressure on inflation and especially demand pull inflation. And with inflation, expected to rise, the Bank of Thailand may need to raise its interest rates, by more than it has planned. So again, this has an impact not only on the fiscal stance, but also on inflation and probably on the interest rates as well.
But do you not think that maybe Thailand has room actually in the inflation side? I mean, there are the expectations of economists like yourself, surveyed by Reuters, is that inflation could actually contract in the month of June, and it's actually below 1% at the moment. Are we worrying too much about inflation, or are there things that perhaps we're not aware of with regards to inflationary pressures?
As economists, we're always worried about inflation because it's the expectations of inflation that is more important than the inflation itself. So, with all these campaigns that are coming out, the rise in the minimum wages or even the cash handouts that, for example, Pheu Thai promises 10,000 baht for everyone who's over 15. That's a lot of money that will go into the economy in a very short time. So again, with those expectations, we can see demand pull inflation and, of course, probably a rise in interest rates to calm those inflationary expectations as well.